It's not every day that the stock market catches a fever pitch, but the latest buzz is turning heads. The AI-driven surge in stock prices has created waves, particularly for powerhouse companies like Nvidia Corporation and Microsoft Corporation. Yet, there's a pervasive gloom lingering over the broader technology sector, especially after we have seen it tumbling down left and right at the chance of a slight delay in the much-anticipated next phase of the AI revolution that we were promised by Nvidia time and time again. Are we witnessing the dawn of a new financial epoch or teetering on the edge of another tech bubble? Esteemed voices like Tony Kim of BlackRock and Asana CEO Dustin Moskovitz have weighed in, suggesting a complex landscape riddled with both promise and peril, and companies like Nvidia hiding a huge secret and keeping it away from the hands of all eager investors. But let's not get ahead of ourselves. Hold on to your seats as we delve deeper into this riveting tale of tech triumphs and setbacks. Welcome back to Investocracy.
All right, I got something to say about this mini semiconductor bear market. For the last couple months, Wall Street learned to love to hate the chip stocks. The whole group's down almost 22% from its highs on July 11th, as represented by the SMH. That's a key semiconductor ETF. Many individual names have come down even harder from their highs. Intel is off a staggering 63%. Micron down 45%. AMD's lost almost 40%, just to name the most egregious examples. Now, some of that's simply because the chip stocks got overheated. While the SMH may be down 22% from its highs, it's still up over 25% year-to-date, comfortably outperforming the SP 500. They rallied too far, too fast, and need to come in. On top of that, you've got these pervasive worries about AI spend. For the past few months, we've been hearing that the companies spending fortunes on AI infrastructure simply aren't seeing enough of a return yet, and they might start dialing back their investment at some point. Now, I don't see much evidence of this, though. The bears will point to Nvidia's failure to report a spectacular revenue beat, but that only happened because their new AI chip Blackwell got delayed. They are having trouble producing it at scale. That's totally reasonable. But they've basically solved the problem now. Supply problem, not a demand problem. Demand is off the charts.
Amidst the intoxicating allure of artificial intelligence, the overall technology sector finds itself at a crossroads. While giants like Nvidia and Microsoft have been posting remarkable gains, a swath of the market remains mired in post-pandemic challenges. It's as if AI has become the star quarterback, while other tech players watch from the sidelines, nursing their injuries. Tony Kim, head of technology investing at BlackRock's Fundamental Equities division, puts it bluntly. When you look at technology outside of AI, there's not that much happening. Now, that's a cold splash of reality, not unlike realizing your perfectly timed stock investment was actually at its peak. Remember those days of toilet paper and hand sanitizer stocks? Perhaps it's their tech equivalents that are now feeling the pinch. Financial reports reveal a tale of two worlds within the tech sector. AI-centric companies are accelerating, while traditional tech firms, engaged in software, IT consulting, and electronic equipment production, struggle to find solid ground. This divergence was sharply highlighted by Dustin Moskovitz, co-founder of Facebook and current CEO of Asana. He referred to it as an unwinding of the overhiring and overspending initiated by the pandemic. It's as if the tech world is waking up from a frenzied dream to face a sobering reality. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
You've got people worrying that we're headed into a recession, which could hit all kinds of tech hardware and trickle down to the semis. But the Fed's about to cut interest rates next week. And an easing cycle will bolster the economy. Buy! Plus, this very evening, we got a startlingly a good report from Oracle. And a lot of the good news came in concert with data centers for AI. Hey, not bad. In the end, I think the chip stocks have sold off way too hard. Every reason we had to like this group earlier this year remains intact. The AI spending boom is very real. There's a ton of money being spent to build out the infrastructure, as we heard from Oracle this evening. More important, there's more to chips than AI. For the past couple of quarters, we've been exiting a period of oversupply in the semiconductor market, and we're now finally seeing some excellent sales growth. Yes, we're past the point of equilibrium. We're going up. The semis just had their fourth straight months of sequential sales growth in July. Do you really want to abandon this group just as we're coming out of a supply glut?
Recent data corroborates this split reality that the tech market is presumably living in right now. Analysts have observed that a majority of large tech firms are experiencing slow growth, while many smaller ones are actively shrinking. Investor enthusiasm, particularly for AI-focused enterprises, cooled off since the summer. Predictions now suggest a gradual shift of investor interest from big tech to sectors like financial services and industrials. And just when you thought it couldn't get murkier, consider this. In August, some investors and analysts flagged the AI sector as a potential bubble on the verge of bursting. Yet, here comes Goldman Sachs in September, calming waters with assurances that the AI sector is not replicating the speculative bubble of the late 1990s internet boom. It's a classic case of he said, she said, but in the high-stakes world of stock markets, these fluctuations have real consequences. Take, for instance, Nvidia. The company's stock has soared by double-digit percentages this year alone. Microsoft has enjoyed a similar ride, thanks in part to its strategic investments in AI technologies. Discussions from market analysts show a mix of skepticism and optimism, some lauding the enduring value of AI, while others caution against the hype. But keep in mind, we have seen Nvidia's stock taking hits after hits and then coming back from its supposed grave like nothing ever happened. Because when we talked about Nvidia being too big to fail at the current moment, this wasn't us trying to gas up the company behind the AI revolution and the subsequent thriving of the tech sector. We were talking about a true global leader who understands their position and knows to plan ahead. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Part of the accusation is that it's harder for suppliers to switch, it penalizes buyers. What is the worst case scenario here? Is it a chip, a mini chip or fissure in the moat, the grand moat around NVIDIA?
Look, the moat is what Jensen and NVIDIA have created, right? I mean, and that's not going to change. And I can almost take the other side. Okay, DOJ is looking into this. Rather look into this, give some sort of all clear so it's not a concern. I mean, look what we've dealt with the likes of Apple, Google, Amazon, some others for a number of years. But I don't think it changes that. And I think the reality is they are the only game in town. And nothing's changing that. From an innovation perspective, when you talk about $1 trillion of AI CapEx over the coming years, where NVIDIA is going to get a significant piece of that.
In just this political climate, though, Dan, where you have two candidates and their vice presidents who almost feel like it's a competition of who can have the most populist policies. And then you look at something like Google getting slapped for antitrust violations, too. Is this a political climate that maybe you need to take a second look at some of these big tech names that we thought were safe from antitrust regulation and scrutiny, and maybe this time is different?
Yeah, look, I think it is a little different. I mean, look, Apple, we'll see that over the next, call it 12 to 18 months. But I think after that Google win from the DOJ, I think the climate does change a bit. But I think the reality, look, we've talked about it on the show, strong have gotten stronger. I mean, you talk with your previous guys about Mag 7 and big tech. That's not going to change. In other words, big tech are going to get stronger. And I'd argue with AI revolution, that's actually accelerates. And we'll see next week, when Apple launches iPhone 16. So to me, it is changing of the climate, but I think it just speaks to just tech is just going to become a bigger and bigger piece. And big tech, even through M&A, I think that's going to be the biggest variable. FTC con, where that all goes, depending on political climate. I think it's all added to some of the agita as once September hits, going into the elections. I think that's also some of the sell-off that we've seen, just some of the nervousness going into the fall.
So, where does this leave the average investor? Picture yourself at a lavish buffet, mesmerized by a sumptuous dessert table. The AI sector is that eye-catching confection, while the main courses, the traditional tech firms, may not look as enticing but offer fundamental value. Is it wise to load your plate with sweets alone, or should you balance it out? Some analysts will welcome this analogy with their arms wide open, trying to warn everyone else about the dangers of putting all your eggs in one basket, while some other bullish analysts will reject this idea completely on the basis of companies like Nvidia being likened to the side dishes or the sweets instead of the fundamental to a full-course meal. It is up to you to decide which one makes more sense in our current-day context. In the end, the stock market's narrative remains as gripping as a binge-worthy series, with unexpected twists, dramatic turns, and cliffhangers that keep you coming back for more. As we navigate this landscape, the voices cautioning against a speculative bubble remind us of not-so-distant past crashes, while the bullish sentiments signal the untapped potential of AI.
Yes, Scott, I think we had a good thesis last week that Nvidia was going to be volatile. Option markets were indicating somewhere between a 9% move. You just never know if it's going to be up or down. It'd be a lot easier if you did. Same thing with Broadcom yesterday. Pretty heavy indication of an 8-9% move. So what we did yesterday with Broadcom is we wrote a covered call, only a 1-week expiration, so it'll expire next Friday. But the annualized premium that we brought in was 60%. Now, I realize that sounds crazy, and it's only because of the hyper volatility heading into earnings, but we brought in $1.73 yesterday. We wrote a covered call on Broadcom, incidentally, when we did the NVIDIA call last week. We brought in $1.25. So we closed that out yesterday, wrote another Broadcom call. It brings in about $3 in premium for the past 2 weeks. Now, granted, the stock's down a lot more, but we were able to hedge 20% of today's decline with those 2 option trades just within the past 2 weeks. So it worked out well for NVIDIA. It's worked out well for Broadcom. The stocks are trending down, so I think we want to be a little bit patient before we add to them. But I think that you'll get a buying opportunity. And we're seeing prices, Scott, similar to where we did at the at the jobs report last month when we saw the massive sell-off. So I feel like that would be a good entry point for people to buy the dip for sure.
As we digest this wealth of information, one takeaway becomes clear. The AI sector holds immense potential. Despite the broader technology sector's current weakness, companies like Nvidia and Microsoft stand out as top contenders. Their leadership in AI positions them uniquely for growth, making them compelling options for investors. Given their current trajectory, Nvidia and Microsoft are not just riding a wave, they're defining the future. Analysts' forecasts predict continued strength for these stocks, even amidst broader market volatility. With AI's transformative potential only beginning to unfold, now could be an opportune moment to consider investing in these leading players. So, what's your take on this whirlwind of stock market dynamics? Is the AI sector the golden ticket or a sugar high waiting to crash? Share your thoughts and ignite the conversation. After all, in the stock market, informed debate and insight are as valuable as the stocks themselves. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.